Before we jump into this, know this: I personally am not sold on a lot of the aspects of this quote new frontier, but I do find it incredibly important that we all educate ourselves on this space, whether we each become investors or critics of this space. Chamath and Mark Cuban, both public supporters and investors in the space, are also far from the authorities on this topic and should not be followed blindly here. You'll know why before the end of this video. That said, this space does offer massive returns on your investments, or more accurately, on your bets. But if you want a place where you can potentially put a few $1,000s and wake up later with life-changing wealth, this is the space to learn. And yes, these opportunities do still exist today, they're just fewer and further in between.
In addition to Bitcoin, which coins, if you will, cryptocurrencies, digital assets, are you a holder of, are you a believer in?
Well, I will be publishing this soon. I am building a fairly sizable portfolio of what are called NFTs, non-fungible tokens, some digital art, some virtual trading cards. And these may sound crazy to some, but I do think that that's the next frontier of digital currency and digital assets. And so I have been building a portfolio. My decision is the team and I will announce it. We will publicize everything we own, and we will make our holdings transparent so that folks can track along and see as we buy and sell things. So that's coming in a few months. I'm not really ready to show the details of exactly what we hold yet, but I'm really excited. Maybe in a few weeks, actually, but I'm very excited. We're almost ready to tell the world.
So far, these NFTs are making waves mostly in digital art, video games, collectibles, intellectual property, and insurance. Gaming will be a massive driver for NFT growth in the near term. The partnership between Coincheck and Engine is creating NFTs for the popular video game Minecraft, with 126 million players that already understand and are comfortable with things like digital currency. The floodgates here could open at any time with continued success in NFT adoption. Previously, you couldn't exchange an in-game currency or item with fiat currencies, nor could you use them in another game because you don't actually own them. But in the world of blockchain games, you own all of the tokenized in-game assets in the form of NFTs in your wallet and can trade, battle, fight, or race with them across multiple games. You can actually now own and control all of these assets, whether it's a customized gun, skin, or currency. But this space goes far beyond just gaming, collectibles, and art. Chamath's team will publish their holdings in a few months, so stay tuned to see what those end up being. As he said, it may sound crazy, but the total value of crypto art alone is already over $100 million, according to cryptoart.io. And this figure is estimated to make up less than 25% of the current total NFT market. Now, to be clear, these figures should be taken with a grain of salt, as there are different estimates in different places. I've been following NBA Top Shot, one of the latest examples of NFTs being pushed to the mainstream. And yes, the NBA is directly involved with NBA Top Shot, which is a platform offering NBA highlights in the form of NFTs that are owned and validated on the blockchain. They're being bought, sold, and traded, and normal NBA fans have been turning hundreds of dollars into thousands of dollars in just a matter of days. My point here, though, is that the experimentation with NFTs is not going to slow down, it's just getting started. And being first to these new spaces as they develop can be a ridiculously profitable short-term endeavor. But for me, NFTs have far more potential to revolutionize the world of finance as we know it. Think about slow and outdated things like buying a house. The current process requires lawyers having to track down hundreds of pages of documents for titles to homes and land, which now in theory can be turned into NFTs via tokenization, which would have real tangible value, expediting the home buying process that, as mentioned, is incredibly slow and laborious. A Tokyo-based startup, Yeedle, is already working on this by creating a peer-to-peer marketplace where users set their preferred lending or rental terms. These contracts are then carried out by smart contracts, removing any need for an intermediary, and eventually NFT owners on Yeedle will be able to earn passive income with their assets. There are many applications just like this as well, which is why knowing this space is crucially important, and it's not just speculation. speculating on collectibles and gaming. That said, to sleep on the gaming industry that was worth over $90 billion last year, an industry that is growing every year, would be reckless and irresponsible as a lover of investment opportunities. And the collectibles market, roughly $370 billion. Most of us know by now that alternative asset classes deserve our attention with the unprecedented quantitative easing experiment the United States is running. And yes, most of us know about Elon's antics with Dogecoin and Bitcoin, but his girlfriend Grimes is now squarely involved in the NFT world with a War Nymph digital art collection hitting the markets in just a few days. Nifty is an NFT platform acquired by Gemini and the Winklevoss twins back in 2019. And later this month, Christie's, a major auction house, is going to offer a standalone NFT work of art, one that has no physical underlying asset, it's strictly digital. This one was created by Beeple, his real name is Mike Winkleman, and he created this pixelated work of art that will be encrypted into a file, and the eventual transaction to the winning bidder will be registered on the blockchain. Beeple has already created concert visuals for Ariana Grande, Justin Bieber, Nicki Minaj, and others, pulling in millions of dollars in revenue. So here we have it, the next frontier or digital assets, non-fungible tokens. If you fall a bit more on the riskier side of the volatility spectrum and are swinging for returns from 100% to 10,000% in shorter time frames, this could be the space for you. I will add once again, it's a very speculative, nascent market as of today, and it's not without its own troubles and manipulation. But as mentioned, let's get educated on what these NFTs really are, understand the technology so we can all be informed to make the best decisions going forward. Non-fungible tokens, or NFTs, are just digital assets that represent a wide range of unique, tangible, or intangible items, from collectible sports cards to virtual real estate and even digital sneakers. They cannot be replicated, they cannot be counterfeited, they can't be inflated, and they have ownership guarantees. These NFTs operate on the blockchain, and usually Ethereum to be specific. This is why Chamath lacks some credibility in this space.
Well, I was also curious, so do you see merit in any of the other crypto assets, in particular Ethereum?
No.
So Chamath previously writing off Ethereum as an asset class makes zero sense if he believes in NFTs, as there are quite literally no NFTs without the Ethereum blockchain. So yes, maybe he educated himself since that video and has changed his mind, but either way, he is still new to the space. So if you're going to follow his lead, do so with caution. And then we have Mark Cuban, who has super mixed public comments about crypto in general, but it seems as though he is planning NFTs for the Dallas Mavericks, for things like virtual gear, pictures, videos, or anything their imaginations can come up with. But this space won't make sense without understanding the benefits of blockchain ownership. A blockchain is just a database of transactions or a public ledger. The way transactions are recorded on a blockchain makes them immutable, meaning they cannot be altered or changed. This built-in trust in the system is made possible by cryptography and proof of work, but these are topics for another day. Just know, in simple terms, blockchain is a decentralized public ledger that verifies and records transactions. These records of data are stored on networks of computers, making them decentralized, transparent, and immutable. The data is recorded and stored on multiple devices in multiple locations, so no one person, government, or entity controls the data recording or the storage process. This eliminates forgery or frauds or fakes, since everything can be traced back to its origin. But why does this matter? Think about it like this. Right now, as a United States citizen, we do not know how the government spends our tax dollars. There is no transparency. And even if the government had to release their records publicly, they could easily forge or manipulate them, since they are the central entity in charge of recording the transactions in the first place. So this is not a trustworthy system. Compare this to if we could see a live public running ledger of how every tax dollar is spent by the government. In this scenario, there is much more trust and transparency. This is what the blockchain technology creates. And then we have fungible versus non-fungible. Fungibility is the ability of an asset to be swapped with another asset of the same type, aka it's interchangeable. A $100 bill is fungible because you can exchange it with any other $100 bill and the value does not change, so fungible assets means exchanging them is meaningless. Ethereum and Bitcoin are fungible because one Bitcoin is no different than any other one Bitcoin. Non-fungible, on the other hand, means an asset is not interchangeable or divisible. A dog would be non-fungible. fungible. Even if it was the exact same type and breed and age as another, the dogs have their own unique personalities and experiences and traits that make them non-fungible. So non-fungible tokens are crypto assets that are indivisible and unique, creating digital scarcity, and they cannot be swapped like for like because no two of them are alike. And NFTs are not divisible, as sending someone part of a concert ticket, for example, would not be redeemable by the recipient. So these NFTs are usually linked to a specific asset and can be used to prove ownership of digital items like in-game skins, all the way down to real-world items like physical assets. NFTs can be bought on many different NFT marketplaces like Rarible, OpenSea, Terra Virtua, or the Engine Marketplace. Super Rare is one of the leading players in the digital art space, providing a marketplace for rare and valuable pieces of digital art. So far, over $4.6 million has been earned by artists selling their work on the platform. But here's the fun part. Some NFT sector plays that have great potential that you can further research and study. Full disclosure, as always, I do own and invest in Ethereum, but I do not have positions in any of the specific NFTs I'm about to mention. Your first option would be taking a broad strokes approach to invest in the infrastructure for these NFTs, mainly Ethereum. This play would also give you direct access to decentralized finance and the IP of some of the smartest brains on the planet that are currently dedicating their lives to building dApps or decentralized apps on the Ethereum network. But of course, you won't get the full upside of direct NFT investments with that strategy. So to earn all of the upside, we need to look elsewhere, although this strategy is usually a more winner-take-all method due to the network effects over time. If you want to learn more about network effects, watch this Raoul Pal video in the card. So for a more direct investment, you can look at blockchain domains. These function like a regular domain and address people use to access a website, but these domain assets are on a blockchain, and there are two main benefits of this. First, the domains can be used as a payment gateway, meaning you can funnel all crypto addresses to one address that is easy to remember rather than the typical long public address that looks like this. If you're new in crypto, a public address is just where the crypto is sent, like a mailing address. So I can tell my friends to send crypto to dylan.eth instead of something like this. And the second benefit is the ability for anyone to create censorship-resistant websites. Think of journalists under authoritarian leadership. These would have massive value. You can also store blockchain domains in a crypto wallet. It's an asset you can flip and sell in the future as well. People have made millions of dollars flipping regular domains over the years. Voice.com, for example, today is worth $30 million. It would have been pretty nice to scoop that up back in the day for pennies on the dollar. And just recently, a professor sold crypto.com for $12 million. These blockchain domains are still incredibly niche, but are selling for very high valuations. .eth is expensive and you have to pay annually to renew these, but there are many desirable .eth domains that are lapsing that you could look around for at ens.domains. .crypto is another one, and this one does not have annual renewal fees. Unstoppable Domains is where you can go to browse for .crypto domains if you're interested. Next up would be Engine, a pure NFT blockchain gaming platform. This is where developers can create their own games on Ethereum with their own currencies and in-game items issued as NFTs. This is one of the most innovative crypto platforms, as they created the ERC 1155 standard, combining the benefits of non-fungible and fungible tokens, which just enables the issuance of both types of tokens on the same platform. Engine Coin will need to be locked up to enable these specific NFTs, so if a game were to blow up on the platform, it would lead to a reduced supply of Engine coins, which would of course drive up the price. And one more for today would be Rarible, where they sell in-game items, rare blockchain art, blockchain domains, and insurance. It's the only NFT marketplace that I'm aware of that's actually aiming to become a fully decentralized organization run by users and for the users. The key component here is the governance token called Rari, which is actually how you can get exposure to Rarible. The Rari token is used to basically provide voting rights and to influence decisions and incentivize incentivize certain actions in the community, aka the community saying, hey, we'd like this to happen, but ultimately the Rarible team and management has the final say for now. But in the future, the marketplace fees from transactions on the network, if it does become fully decentralized, could end up being divvied up and sent back to the token holders, which is a very interesting prospect for sure. So in summation, this is a highly speculative space, but one that at the very least deserves some time researching and exploring with an open mind. If you're new to cryptography and blockchains, it's going to take you extra time to understand NFTs, and it's definitely not all roses. Building decentralized apps is very hard and time consuming. User interfaces are still challenging for everyday folks at times. Some NFTs will be pure bubbles and ultimately worthless. Most projects don't retain long-term users, and a lack of users means a lack of liquidity. But despite all of the risks, this space presents more opportunity for financial returns over the next 10 years than almost any other asset class or investment. And if the next generation understands anything natively, it's the internet, social media, culture, and digitization. So as this generation grows up and enters the phase of asset purchasing, and the older generation that does not understand the internet or anything I mentioned in this video is replaced in the market, these trends will become more widely accepted every year. Not to mention the innovation and creation that also improves every year in this space. But that's all I have for you guys today. Please take a second to like this video if you did. Consider subscribing for more investing content, and I hope to see you in the next video. I hope that you have a great day.